One of Australia's most important companies, the global mining giant Rio Tinto, faces allegations that will rock the company but also question the veracity of our own corporate regulator. The powerful US Securities Exchange Commission has charged Rio Tinto and its former chief executive, Tom Albanese, with fraud over their handling of a failed coal project in Mozambique 6 years ago. Here's the man at the centre of those allegations from 5 years ago.
We're a two-speed company or a two-speed culture. Everyone is galloping at a fast pace at the top of the cycle, and everyone is actually standing still at the bottom of the cycle. Now, neither of those are the right answer.
Well, they were galloping when they paid $3.7 billion US for the Mozambique coal project. Now, after it paid, it discovered the coal was of poor quality and the Mozambique government would not let the coal be floated down the Zambezi River. The SEC charge sheet claims a business that was worth $3.7 billion US, 5.5 billion Australian dollars, was ultimately sold for, wait for it, $50 million. In the space of just 2 years, they lost 98% of that money. The SEC claims Albanese and then Chief Financial Officer Guy Elliott were told the project was worthless but didn't disclose it when they raised $3 billion from US investors in the subsequent year. It also alleges the value of the Mozambique assets were not accurately represented in the annual or interim accounts issued to all investors in 2012. Rio Tinto strenuously denies all the claims, but Albanese quit when the disaster was finally uncovered. But something odd also has happened. In the very same press release where Rio Tinto yesterday said it believes the SEC case is unwarranted and will be rejected, it added one more extra piece of information. It said it's settled with the UK Financial Conduct Authority over exactly the same issue. Namely, it didn't tell investors of the financial impairment in 2012.